morning everybody, it's Chris here from Serene Education with the 4 major news update for the 5th of March 2013. Hi guys, I hope you had a last weekend. Apologies we weren't here yesterday, we had students and unfortunately we weren't able to do the currency videos for you. But back today, so let's get cracking. The 4 majors, starting with the euro against US dollar. Let's have a look at the 4 templates that make up the long-term template of my euro US dollar trade. Let's have a look at that weekly chart. Okay, still hesitation. Last week we saw price moving between 2 points, prior consolidation higher at the 131 500 and moving into our long-term support and resistance level here, the dark line. These are my dark lines that I've taken from my monthly highs and lows. Okay, so moving into a major support and resistance level near term, and you can quite clearly see that price hesitated or closed, pulled back on Friday evening, and the start of this week looking very tentative and moving sideways. Remember also where this line is here, this solid line is the 1300 mark, so a nice round number. Daily chart, let's bring that up so you can see it. There we go, my black line is my weekly line, strong support and resistance. You can quite clearly see where it is now in the shape of 1300. And all these smaller time red lines, these horizontal lines, are my Fibonacci tracements from my all-time low of July last year low to the current high that we've seen just recently in February of this year. You can quite clearly see we had an uptrend, and near term we've had a break of that, and so our histogram on either side, our ribbon, everything went negative, and we should have been looking for shorting opportunities to these areas, particular areas. In fact, the most important one being the dark black one for now. What we want to see now, if this is still to be negative, is to see price break through this 1300 and then target the institution moving average, would be down here roughly around the 12900 mark. So important to see price breaking that. If not, you can see quite clearly yesterday and on Friday, very indecisive, spinning top on both days. More action yesterday, the top end of the candle, very indecisive. We had Eurozone meetings yesterday, so very tentative trading, a lot of speculative trading intraday. And that is what we saw yesterday on our 4-hour. Not really going anywhere really quickly, however staying under the prior support and resistance level on the intraday time frame, which happened to be the 1305 mark. So you can see I'm building a picture. There's my dark black line again, which is my weekly low, or my support in this case, and price has actually moved into it. Now it's imperative that price remains below 1305 and we get a bearish engulfing candle to close lower than 1300 to confirm that price is still looking negative. You can see there's more red than blue, so the trend is negative. My institution is well above price, so we can see if we can catch some more profit to the downside. Negative trend. If we see a bounce here and we break above 1305, then we should look to target back towards the 50 period moving average, but ultimately back up towards the prior consolidation high and low here at the 13500 mark. So there's a good lot of pips to be made to the upside if we get a nice bullish engulfing break to the top side. Otherwise, look for that bearish sentiment to carry through. We are going into a very news heavy, fundamentals heavy week. It's Tuesday, but we got Thursday, Friday being the most important days. We've got a lot of interest rates announcements, etc. for Eurozone in particular, but we also have non-farm payroll this Friday. Okay, so it's very important. We could see action happening around here, which could lead to next week being either up or down. On to sterling. Let's have a look at the weekly chart. Very negative indeed for this particular pair. Huge drop since the January highs. Nice shooting star. You had resistance and the trend line, and you can see price fell away quite nicely. In doing so, breaking through all the moving averages. So as long as trades below all the moving averages, then it's more likely to be negative sentiment. And sure enough, we saw consolidation here at a February tracement area. There's my dark line, which constitutes my weekly and monthly support and resistance level. Very strong one here in the shape of the 15300 mark. Price since 2010 has found support at this level, and you could see a break here at 1700, which was the near-term support area, and you can see price actually rallied into that 15300, went straight through it, slight pullback, and obviously even continuation last week. However, this week a bit of positiveness. What I've done is I've taken the fib projection level from my all-time high that we've seen recently, which happens to be the January high, to the current low, or the support here, the pullback here at 15700, and then projected it back to the bearish engulfing candle that preceded this consolidation at the support, and that would have been our target. This moved downside, That would have been our target 100%. Sure enough, closed below the 15,300, which is the major support and resistance level. We had a slight pullback. However, you can see quite clearly yesterday in particular, heading into that 15,300 at the 1505 mark, and subsequently you can see now that we are seeing price now consolidating. So if I look at my daily time frame, I want to make a note of my major long-term support and resistance level. There you go, 15,300, black line. That's my weekly support. In this case, you can see it's above price now, so this should continue to be resistance. You can see that I've written 1505, which is that 100% fib projection level that we've just reached. So you can see prices now starting to be more consolidative. A lot of hesitation as we've broken through the 15,300, because this 15,300 happened to be a major support. Now we're below it. We can see a lot of hesitation. We want to see a confirmed move now in the direction of the breakout. You can quite clearly see we've been very negative since the start of January. A lot of red on either side to marry that up. So as long as we maintain below 15,300, there's more likely for price to continue to the downside. So near term, if we want to see further shorts, we want to see price breaking and closing lower than 1505. So very, very important to make a note of that on your intraday time frames. Here again, you can see my 4-hour setup. The institution's well above price. A lot more red on my ribbon on the other side telling me that sentiment is generally negative, and I should be looking for negative setups. Sure enough, you can see the trend near term, overall swing low, swing low, swing low. You can see where price is trading now on the bounce. The pullback that we've seen over the past couple of days has seen price pulling back above 1505. So it's important, if we are to see further shorting opportunities, we do need to see 1505 being breached to the downside. Nice bearish engulfing candle will confirm that, and then what we do is we look for lower lows. So we'd have to go to our weekly chart to see where the next one is, and it's roughly around the 1485 mark, which just brings us back to the lows we saw, the consolidation lows here through the start of 2010, guys. So it's quite a long way back. On to the US dollar Swiss franc. Let's look at the weekly. Very hesitant, very sideways, very indecisive since of October. Moving lower, however, you can see a lot more negative sentiment. But near term, you can see price, the US dollar, really gaining a bit of momentum against its Swiss counterpart, and doing so, breaking consolidation. There we go. You can quite clearly see we had a swing low, swing low, swing low, and then we had a breach. We wanted to get above all this. There's far too much consolidative news. Now I'm interested to the upside, primarily because the Swiss franc is now trading above all this noise. It's got to stay above this noise now on our weekly. Above 945 in particular would be great. Nice push off the underside here at 945 to the upside, and we should be targeting the institution roughly around the 970. Break above that, but then we should be looking at the all-time highs here around the weekly highs, which go back to monthly and weekly highs around the 1000 mark. So on our daily, I want to make a note of all that. You can quite clearly see my daily now, price staying above 940. Okay, but in doing so, trading into the institution, you can see yesterday's candle pulling back, and then Friday's candle really pulling or moving higher, but capped by that institution. So it's imperative we get above the institution. You can quite clearly see that we've come from a low point, swing high, swing high, swing high, depicts upside movement, strong trend. However, to see a long-term strong trend, we need to get above that institution as soon as possible. So a nice bullish engulfing candle here at support. This happened to be prior resistance in the past, as well as the institution. Got to get above it in order to see price maintaining that positiveness in the market. If we don't see it, we get a bearish engulfing candle. Price is more likely to revert back to the downside and look at and target our weekly, monthly support and resistance levels here in the shape of the 930. So imperative that 940 remains below price as support. There we go. I've made a note of it. My intermediate uptrend intraday, you can quite clearly see swing high, swing high, swing high, swing high, swing high, depicts upside movement, which is important, and long may continue. Otherwise, if we get a break below 940, we'll target 930 and back to the trend line. So very important we see a nice bullish engulfing candle here. The last pair of the day is US dollar Japanese yen. Monthly, let's have a look. I've gone from monthly, weekly, just to show you how far we've dropped, how far the US dollar has dropped. And in doing so, what I've done is take the all-time high in 2007, which was the all-time high for the US dollar against Japanese yen, to the current low, the all-time low that we've seen through 2011 and the start of 2012. And you can see the 23, and these are fib projections now. It projects these fib projection lines, 23.6, the 38.2, the 50, the 61, the 78, all the way back up towards the 100. So you can see quite clearly the past couple of months heading into December, very strong, and then over December going into January, moving up towards the next fib projection line, which is the 38, which happened to be price support here at 94, and it's now come unstuck at 94. I'll show you my daily. There's a black line that tells me that's my weekly, monthly highs at 94. and you can see price action over the past, well, the past month in particular, very, very indecisive. Heading into it, bearish engulfing candle a week ago, pushing lower. However, price only moving as far as the fib retracement 23.6, so a very short pullback. I've taken the low here in September to the current high because it's 94 now constitutes to a strong resistance, because you can see price has gone sideways for a month, and you can see price actually only pulled back to 23.6, and then we saw a bounce again. Indecision and then more buying sentiment in. So if it's going to be moving higher, we target the price support and resistance level high. Here back at 94, indecisiveness yesterday, and you can see bearish engulfing as we speak. A lot of selling throughout the Asian session as we head into this very psychological round number. So it's imperative this, if the US dollar is still to maintain positiveness against the Japanese yen, then it needs to get above the 9,400 as soon as possible. Could we see that this week, going with non-farm payroll, etc., this at the end of week Friday? It remains to be seen. However, we do need to see that happening in order to see price moving higher. Failure to see price breaking 9,400 soon could result in seeing another bearish engulfing candle, and if that's the case, target back towards that 950 mark, and if we get it close below that, back towards these 88s and back towards 87 overall, which is our next long-term support and resistance on our weekly, monthly time frame. Okay, so that's how I do it, guys. Please factor that into your trading. Okay, if you are using this particular template, please follow the rules of the template. It's very, very important. There are 4 guideline rules that you need to apply to this template, and then on top of that, you apply your money management. Okay, otherwise, have a fantastic trading day today. Be aware there's a lot of news this morning, and there's a hell of a lot of news going into Thursday and Friday. So there's a hell of a lot of news out this week, and it could be very, very important as to where price is likely to take us going near term or long term for the foreseeable future going into the new week next week. Okay, so if you're not trading anything, rather stand aside for Thursday and Friday and see what happens with all the news that comes out on Thursday and Friday, because that could set up for potential trades long term going into the new week next. So keep that in mind. Otherwise, have a fantastic trading day. Enjoy the weather, and I'll see you first thing tomorrow morning. Until then, you trade serenely.